Friends, welcome to another content-based video from the Wall Street School. Friends, in this video, we'll talk about one of the very interesting industries, semiconductor industry in India. So, just to simplify this video, guys, I have divided this video into 4 key sections. Section 1, industry overview and size. In section 2, we'll talk about industry value chain. What are the different processes involved in the manufacturing of semiconductor and what are the key roles different companies are playing in this value chain. In third segment, we'll talk about Indian government initiative to support this sector. Fourth, we'll talk about key listed players in this segment. So as an investor, if you're looking for investment opportunity in this sector, so I'm just discussing list of the companies and I'm just doing fundamental analysis of those companies. But guys, an important disclaimer here, by no means I'm giving you any recommendation of the stock here. It is just for the educational purpose, just to make you understand how this industry works and what are the different companies operating in this industry. So let's start. But guys, before we start this video, let's quickly understand what exactly semiconductor means, right? So guys, semiconductor, in simple terms, we can say it's a sort of a brain. We can say it's a brain in any electronic gadget or device. So basically, all functionality of your electronic gadget is controlled by semiconductors. If you talk about, if you take an example of your smartphone. So in the smartphone, you will see all the functionality of a smartphone is controlled by semiconductors. There are thousands of semiconductors used in manufacturing a smartphone. And that's the reason, guys, if there is a shortage of, production of semiconductors, it will hamper production supply of all electronic products. Right. So friends, this is very important part of today's growth story of electronic industry in any country and also overall GDP growth of any country. So that's why every country wants to establish a complete control on this particular sector. And so India is. Okay. So first, let's talk about industry overview. Let's talk about the size of the industry and what growth trajectory this industry is into. Guys, if I talk about current size of Indian semiconductor market. So it's almost $45 to $50 billion market in year 2025. This is an estimated number for year 2025. So it is estimated to be $45 to $50 billion in the current year, which is expected to reach at $100 to $110 billion by 2030. This is a projection for next 5 years. So guys, in next 5 years, this industry will become 2x and more than 2x. Such kind of growth we are seeing in this industry in India, right? Now, what is contributing this growth? What factors contributing to this growth? One, obviously digital transformation across industries, especially after the introduction of AI, and rising electronics consumption amongst end consumer. These two important factors fueling growth of semiconductor consumption in India. Now, guys, if I look at the current state of India's semiconductor market, so currently India import significant portion of its semiconductor chips from outside India, right? This account for $22 billion of total value of the on the import side. And if I calculate this into Indian rupees, this amount is huge. It's 1.7 lakh crores. And this number belongs to year 23-24, last year number. This year number would be even much higher. So guys, we are spending $22 billion of Forex on this industry, on this import of semiconductors. While India has historically been an importer, so we are an importer of this product. But in 2025, which marks a milestone, which is a beginning of commercial domestic chip production with offset facility and fabs nearing completion. So guys, 2025 May, we are going to launch our first semiconductor, made in India semiconductor by end of 2025. So this is a sort of milestone in the journey of India in the semiconductor industry. Now, friends, if I talk about the global context and India's position into that, so see, currently global semiconductor market is $728 billion, which is expected to reach at $1 trillion by 2030. There is a substantial growth here also in terms of global industry size. But currently, Taiwan is dominating this industry in terms of foundries, like production of semiconductors. We'll talk about the various, different components in the semiconductor value chain. But as far as semiconductor production is concerned, one of the important segment in this value chain, Taiwan is contributing 55% of the total market share. So it's a dominating player in the semiconductor market. Now, what's the position of India in the global market share? So currently India is holding a meager share of just 2% in the global semiconductor industry. And guys, going forward, we are expecting to take this market share to 10%. How? Guys, recently, government has announced various incentive plans, and there is a key focus of the government on this sector. So we can see recently the government has announced Semiconductor Mission, ISM, India Semiconductor Mission, and they've also announced PLI. It's a production-linked incentive schemes for the semiconductor companies. So they are inviting companies to set up project in the semiconductor industry, and they are giving various incentives, and they are helping in the setting up the projects. And so under this incentive plans, guys, government is encouraging company to set up their projects in the semiconductor space. Also, they are encouraging company to increase the production of chips and semiconductor going forward. Okay. Now, let's talk about semiconductor value chain. Let's talk about this entire chain. So, guys, first comes chip designing and IP. So, first step in the semiconductor process, you have to design chip. You have to design. So chip designing is basically the process, defining the process, what function this chip is going to perform ultimately in the electronic products, right? So it includes chip architecture, designing of chip, EDS. EDS is what? Electronic design automation. So before commercial production of semiconductors, when it is in the designing phase, you try to simulate the functioning of this semiconductor. And during this process, we use various IP blocks. So IP blocks is what? Already manufactured designed semiconductors. Because if particular part of your entire the process or ecosystem is already being defined, or somebody has already designed semiconductor for the same, so there is no point of reinventing wheels. So we use those blocks and we create our the entire process, right, functionality of this semiconductor. So this is what the first step in the value chain of semiconductor: chip designing and IP. Obviously, you have to get it patented, right? Second, once you have designed chip, the second step is wafer fabrication. You have to take this to the production process, right? You have to produce semiconductors, what you have designed. So this is called front-end manufacturing in the foundries. So normally we produce products, and those production units are called factories. But where the semiconductors are produced, they are called foundries, right? And where Taiwan dominates, guys. Major share in this semiconductor foundries is held by Taiwan, and it's a very, very capital-intensive and time-consuming process. The third important part of this value chain is raw material and equipment, guys. In this entire process of manufacturing semiconductor, here you need raw materials specific to the semiconductors. You need to use silicon wafers. You need specialty gases and all. So all these raw materials and equipments like lithography equipments, they plays a crucial role, right? And there are companies who are specialized into this. And if we talk about India, so there is no company in India who is specialized into this, but India is planning to develop its competency in this segment also in the long term, right? Not immediately, but yes, long term, right? So you are dependent on the raw material availability and equipment. And the last part of this value chain, the final step in this value chain, is assembly and testing. So once you have produced semiconductors, so it goes into assembly line. So there are OSAT services or facilities where you do packaging, testing, and assembly of semiconductor units. So you first assemble all the semiconductors on ICs, and then you test them for the quality and functionality. Are they working properly, right? And you just package them. So guys, this is what the entire value chain of semiconductor industry. And in this value chain, where India is focusing, guys. See, India has established strength in chip designing. So if you talk about chip designing, 20% of chip designers belongs to India, right? They have expertise in the chip designing. So, but but we are rapidly growing, building a capacity in OSAT. So our next focus is OSAT facilities, because this, out of all the other segments of value chain, part of segments in the value chain of semiconductors, OSAT is one which requires less capital and it can be ramped up quickly, right? So we are initially targeting OSAT facilities, setting up OSAT facilities, and most of the semiconductor projects, what you will see, what government is encouraging or financing, they belongs to the OSAT category. While developing capabilities in the material and fabrication, we are also focusing on developing our capabilities in raw materials and equipment manufacturing. Okay, so we want to be totally in-house dependent on these things, and also fabrications. We are also focusing on establishing foundries for manufacturing of semiconductors. Now guys, let's talk about some of the leading players in the semiconductor industry globally. So this is the list of global players, and you will see, guys, at the top I have kept TSMC. The full form of TSMC, which belongs to Taiwan. This is a company belongs to Taiwan. The full form is Taiwan Semiconductor Manufacturing Company, which is mainly a foundry which controls over 50%. Precisely, it controls 55% of the market share, total semiconductor industry in globally. And the revenue of this company is $96 billion. This is the annual revenue. Next is Samsung, but what you are seeing, the Samsung's total revenue is $217 billion. Majority of the revenue is coming from the electronic appliances and all. Some part of the revenue, almost $60 billion revenue, earned by Samsung through semiconductor. So Samsung is specialized into memory and logic chips. The third player in this, and Samsung belongs to South Korea. Third is Intel, which is based out of US. And guys, Intel is leader in CPUs and growing its share in the AI chips. The total revenue of Intel is $53 billion. Again, it's a huge revenue. NVIDIA, guys, everybody knows NVIDIA, right? This company has been in traction for so many months. This company dominates in GPU market and AI chips. So AI specialized chips this company is into, right? So all the AI tools you are seeing these days, they work on very high, powered ICs. And NVIDIA is specialized into this, right? And the total revenue of NVIDIA is $131 billion. So guys, if you look at this entire list of top players in the semiconductor industry, you will see most of these players either belongs to the US market, most of them are US based, and this is Taiwan based, right? So we don't see any company which belongs to India. And that's why India wants to get into this sector. There are various reasons for that. So I'll discuss, why India is so, motivated to get into semiconductor industry, and why government has, launched specialized scheme to promote this industry in India. Right now, friends, let's talk about India's strategy in the semiconductor industry. So, design powerhouse. India want to leverage its existing strength of 20% global design engineering talent. So India is already good into this, guys. We have almost 20% share in the total talent pool who are able to design chips, who are able to design semiconductors, and we are already leader into this. Material and components, definitely we want to build competency into this segment, but yes, over the period of long term. Developing domestic production of specialty chemical and equipments. Right, aspirationally, if we want to develop these components, these raw materials and equipments also in-house. But yes, this is a long-term story. Fabrication development, as I told you guys, it's a capital-intensive process, and it's a time-consuming process also, right? So we want to build competency into this segment also, but in the long term. But immediate focus is on OSAT. So we want to establish OSAT facility, and which we can quickly ramp up, right, with the less capital, and we want to build competency into this segment. So guys, if I summarize India's approach here, so India targets strategic segment of value chain, which is OSAT, where it can quickly build competency advantage while developing long-term fabrication capabilities. Yes, in the long term, we want to have enough foundries also, because this is what the future of this industry is. By 2030, India is planning to get a market share of $100 billion, guys. This is what the long-term plan of India with respect to the semiconductor industry. Now, friends, let's talk about government initiatives. What initiative government is taking? Because in any country, the industry growth is dependent upon what initiative your government is taking. Is your government is focused on developing that particular industry or not? So it's very important to discuss about government initiatives. And that's the reason, guys, why this industry is buzzing the market over the last couple of months, because of government initiatives. So India's semiconductor mission, what this mission is all about. See, the government has launched India Semiconductor Mission in year 2021. This was the launch year of this semiconductor mission by Indian government. And guys, this is especially after COVID, when there was a shortage of semiconductor, supply of semiconductor globally, and many of the production units were hampered, right? Automobile companies, they were delaying the delivery of the cars and, other electronic devices. So government started this mission in 2021, where they wanted to promote setting up semiconductor units in India. Under this scheme, they allocated a fund of 76,000 crores of PLI scheme, of which they have already allocated 65,000 crores to 10 different projects. So 10 projects are already approved under this scheme since 21 till 25, right? Now, these policies also want to focus on developing semiconductor designing pool, right? Engineers who are capable of designing semiconductors. So they're targeting 5 lakh semiconductor professionals, not just designing part, but also people who are good in OSAT facilities, who are good in working in foundries and all. So India is targeting 5 lakh professionals over the period of next 5 years, right? So it will generate employment opportunities also in India. Now, guys, this marked as a beginning of India's journey to become not just a consumer of chips, but also a global hub for semiconductor manufacturing and design. So, guys, what's the long-term strategy of India is? Because currently India is spending forex on semiconductor, but now the India want to reverse this picture. India want to save their currency, which what they spend on the importing of semiconductor. Second, they want to earn foreign currency on the export of these semiconductors. So they want to become an important part of this value chain, where definitely there is a scope, because India has a huge opportunity. Currently, the market size is too low and consumption is huge, right? So we are targeting a market share of almost $100 billion by 2030. Now, guys, let's talk about these incentive mechanism in detail. Let's talk about their technicalities. So if I talk about ISM, right, which is India's Semiconductor Mission. So what this ISM is all about, ISM provide 50% of capital expenditure support on proportionate basis. So whenever you want to set up a semiconductor project in India, and if that project is approved by government will fund 50% of your project cost. So if your project cost is 1,000 crores, 50% will be funded by the government, and remaining 50% you have to arrange. This is a big support, guys. The second incentive plan what government has brought, production linked incentive PLI scheme. Under this scheme, you will get additional incentive from the government on your productions, on the scale of your production. So whenever, so if you're able to increase your production, if there is an incremental production of chips, then you will get additional 4 to 6% of the total production compared to the previous year as an incentive under this scheme. So you're getting two incentives here. One, the upfront one, which will help you in setting up the project, and other is the incentive under PLI scheme, which would give you an incentive to enhance your production, guys. So ISM provides large upfront capital support, mostly for effects and R&D design and infrastructure, while PLI incentivize ongoing manufacturing performance and sales growth in the semiconductor related products. So it's an incentive scheme which will help you to boost production of your existing units under semiconductor. Now, guys, if I talk about top, semiconductor projects which are approved by government under these schemes. So Government has so far approved 10 projects under ISM and PLI. So we can see, guys, the first two projects which are falling at the top of this list, because depending upon the size of the investment, 91,000 crores and 27,000 crores, these two projects belongs to Tata, right? Tata is planning to establish a semiconductor foundry, right, in Dhorela, Gujarat. Okay. Another project is also coming from Tata. The third project is coming from Micron Technology, where the total project cost is 22,000 crores. And obviously, it is part of the approved list of the project. The fourth project is coming from CG Power, which is an listed company also. The total capital expenditure planned is 7,600 crores. The fourth one is SCL, where the total planned investment is 3,700 crores. Keynes Technology, they are also setting up project with the capital expenditure of 3,300 crores. So guys, Keynes is also a listed company which trades in the stock market. Okay. Now, since this is what the list of total projects which are approved by the government, but there are other projects also which are running, which are going on, though they are not part of the approved list of the project. Now, guys, I'll discuss list of some of the companies which are in the listed space, companies which are already listed in the market, and they're focusing on expansion into semiconductor industry, right? I'll do a fundamental analysis of these companies, which will help you to understand how the company is performing, and you can take an informed decision about your investment, okay, in these companies. So one is CG Power, guys. This company was founded in 1937, almost 90 years back. It's pretty old company. The key business segment of this company is into power systems. Okay, they are into power and distribution transformers, switch gears, and they are also into turnkey projects. As they are also specialized into AC/DC motors, which are used for the industrial purpose as well as in the various consumer compliances. But guys, in 2020, this company was acquired. Majority stake in this company was acquired by a company called Murugappa Group. This group has acquired majority stake in this company. And the reason is what, guys? This company was going through some financial turmoil. This company was at the verge of bankruptcy. And to save this company from the bankruptcy, majority stake was acquired by this group. Now, guys, post-acquisition. So if this company was at the verge of bankruptcy, why I'm talking about this company in my list of companies who could be a prominent player in the semiconductor space? Whereas post-acquisition 2020, that almost 5 years back, this group has executed a comprehensive turnaround. There is a complete turnaround in the performance of this company, financial as well as operating side. So let's look at the financial highlight of this company, guys. In last quarter of financial year 26, the latest quarter, this company has reported an 56% jump in its order book. The total current order book of this company is 11,971 crores, almost 12,000 crores of the order book this company has, which shows the strength in the company's pipeline and the sustainability of its growth in the future. Guys, if we talk about the revenue CAGR over the last 5 years, this company has registered a substantial growth in its sales over the last 5 years since the acquisition by this group, Murugappa Group, 35% growth. Very impressive. Financial stability, debt is almost zero. ROC stands at 37%. Again, very impressive, guys. Return on capital employed. What company is earning on its total capital invested in the business is 37% on a yearly basis. Pretty good. Guys, if I talk about CG Power Semiconductor foray, right, what they are doing in the semiconductor industry, because current business is not into semiconductor, current business is into power segment, right? So, guys, entry into semiconductor industry in early 2024, CG Power entered into this industry when the government of India approved its OSAT facility, right? The project details are, the total investment what they have committed in this project is 7,600 crores, 7,600 crores. What facilities they have developed under this project? G1 and G2. G1 facility is just a pilot plant, guys. It's a pretty small facility where the production capacity is 0.5 million units per day. And this facility is already into operation. The another facility, which is G2 plant, this is under construction. And the company is planning a capacity of 1.45 crores under this facility per day. Guys, commercial production under this second facility is expected to start before end of 2025. So guys, this is about their project in the semiconductor industry, right? Pretty impressive, and companies coming out with a huge project in the under OSAT facility. Okay. Technology collaboration, guys, on the technical side, how the company is taking technical help, for this particular project. They have entered into a strategic partnership with Renesas Electronics, which is a Japanese company, and also Star Microelectronics, which is a Thailand-based company for advanced packaging and testing capabilities. Right. So they have already lined up their technology partners for this segment. Funding structure, how the fund will come to for this 7,600 crores of the project. 50% of the funding will come from the government under the ISM plan, and second part of the funding, 3,000 crores of the funding will be infused through QIPs. Comet company has recently raised 3,000 crores under QIP. They have placed their shares in the market under QIP. If I remember correctly, around 600 something. They have placed their share at this price. Okay. So as far as funding is concerned, company has already secured enough funding for this project, guys, and company has no plan to take any leverage to fund this project. So as far as leverage concern is there, it's not there, in this semiconductor project of CG Power. Okay. Now, guys, let's talk about my second company here, which is again a listed company, Keynes Technology. And again, guys, this company also they are in the list of one of the 10 projects which are approved by Government of India under MSI, Indian Semiconductor ISM mission. So this company was founded in 2008, pretty young company compared to CG Power, almost 17 years back. Core business strength. What this company is into? Company is into diversified electronic manufacture, right? With expertise in PCBs, cables, and precision engineering, right? Design and builds, assembles tiny electronic parts and circuits that go into cars, aeroplanes, medical devices, and everyday electronics. We can say, guys, they are into manufacturing of brains of electronic devices. They are currently into similar kind of businesses, right? What they want to expand into semiconductor. In terms of operations, guys, this company has 8 advanced manufacturing facilities across India. If I talk about their order book, guys, this company has 7,400 crores of their order book in Q1 of financial year 26. And in terms of financial highlight, the revenue CAGR of this company was 60% over the last 5 years. ROC is 14%, low debt, solid balance sheet. So as far as financial, performance is concerned, pretty impressive. 60% growth in the top line. Though ROC is slightly on the lower side because it's a young company and it's doing lots of expansion and capex in its projects. So return will take some time to come in the future, right? Guys, Keynes Technologies Semiconductor OSAT expansion plan. So what their expansion plan is? Strategic investment of 3,300 crores. They have already committed to build a OSAT facility, right? Capacity of this plant would be 60 lakhs chips per day, okay, which is smaller than, CG Power's plant, which has a capacity of 1.45 crores units per day. So it's just less than half of the 50% of the CG Power's production plan. Guys, these chips will be catering to electronic devices, IT industries, and automotive industries, right? Milestones. Guys, they are targeting to launch first made in India semiconductor chip by October 2025. They are the first one who are going to launch this made in India chip by 2025. And guys, growth contribution. If we talk about the management side, management is targeting 20 to 30% contribution coming from the semiconductor segment within the year of 4 to 5 years. So they're very bullish about this project, their expansion into semiconductor industry, and they're seeing that this segment is going to contribute a significant part of their growth in the future. So guys, this is about Keynes Technology. And yes, on the technology side, they have entered into joint venture with some of the international players, Infineon, Germany-based, Emerson, USA-based, and UST, USA-based player, guys. If we talk about the funding structure, 50% of the funding will be done by the central government under PLI scheme. 20% funding will be done by the state government. So guys, this is the new thing here. Other than 50% funding support, but they're getting from the center,
under the ISM scheme. They're also getting 20% additional funding support from the Gujarat government, right? So 70% funding will be funded by project cost will be funded by government side, and only 30% they need to fund through internal accruals of the Keynes financials. So again, guys, this company is also not planning to take any debt to fund these projects. This funding will come from the government, and the remaining funding will come from the existing projects, because this company is already earning cash flows from the existing businesses. So guys, third company in my list, Dixon Technologies. Again, this company was founded in 1994. Not very old company, but not very young company also. Almost 30 years back, this company started the operation. Business model of this company is it's a leading contract manufacturer. It's an EMS company, guys, for electronic products such as TVs, washing machines, smartphones, LED, and security cameras. So guys, it's a contract manufacturing company. Means it manufactures electronic devices and products for other companies, other branded companies like Samsung and all. Clients, if we talk about the client base, so they have a major clients like Samsung, Xiaomi, Panasonic, Philips, and others. Listing, this company got listed in the Indian stock market in 2017, and since then, it has delivered a return of more than 19%, 900% to the shareholders. There's a pretty impressive return, guys. In last 8 years, 900% return from the share price itself. Scale. If I talk about the current scale of operations, the company operating 17 manufacturing units across the India. Their financial performance of last 5 years, revenue CAGR is 57%, ROC is 40%, leverage is low, debt is almost negligible, healthy balance sheet, and guys, operating profit margins are just 4%. So yes, if I compare the profit margin of this company with other companies, yes, they have a very small profit margins. But guys, it is not just because the company is not doing good. It is because the company is into business of contract manufacturing. And the contract manufacturing, yes, the profit margins are less because you are doing manufacturing for the other brands. You are not selling products under your own brand, right? Now, guys, if I talk about Dixon's semiconductor, expansion plans, so they have proposed a semiconductor fabrication unit in, Noida with an investment of $3 billion. It's a huge investment plan, right? And they are awaiting government approval and policy guidelines for this unit. So this is as per CFO's interview on CNBC 18 in July 2025 that we are awaiting government's approval for this project. Guys, focus is what? The focus of this particular project would be manufacturing display units, catering to the mobile phones, TVs, notebooks, aiming to strengthening domestic supply chains and reducing import dependence. Currently, we are heavily dependent on import market for display units, which are used for various, appliances. So this company want to foray into this segment. And guys, if we talk about the funding, yes, they're expecting a support under ISM scheme, but it all depends upon whether the scheme will be approved or not. So guys, I'll see whether the company will be able to incur such a huge capex, provided the government provides support to this project. They approve this project. Now, guys, the next company in my list is Bharat Electronics, BEL. We all know about this company. This company was founded in 1954 and it's a PSU unit, public sector unit. Guys, the core business strength of this company is this company is into manufacturing of advanced defense and aerospace electronics, including radars, missile systems, communication systems, electronic weapons, and surveillance equipments. They are used in the defense, right, guys? This company is into defense segment. It's a defense company. If I talk about the financial and operating strength of this company, revenue growth for the last 5 years is 14%. They are expanding their EBITDA margins. So EBITDA margins are increasing because of the favorable product mix. ROC is currently at 39%, which is again very impressive. Debt is almost zero. Strong balance sheet, guys, and the order book is standing at 74,859 crores, almost 75,000 crores as on 1st July 2025. Again, guys, very impressive numbers as far as financials are concerned. Now, next company is Moschip Technologies. This is the fourth company in this list of the semiconductor, the semiconductor companies which are listed in the market. Guys, this company was founded in 1999, not very old company, almost 35 years old company. The core business of this company is a semiconductor and product engineering company. This company is already into semiconductor space. And this company is specialized into custom chip design. They are into chip designing, customized chip designing, electronic system design, and smart device solutions, and application in the automotive, smartphones, medical devices, and networking, devices. Right. So this is what the end use of their products. If I talk about their financial and operating strength, revenue CAGR is 45% for the last 5 years. Revenue is growing at an impressive rate of 45%. EBITDA is even growing at 123% on year-on-year basis for last 5 years. This is a substantial growth. Guys, it is because of expansion in the EBITDA margins, right? When the EBITDA grows higher than your revenue, it means your margins are expanding, right? Return on capital employed, 12%, not very impressive. Leverage is low, and size of the company is 5,000 crores. The market cap is just 5,000 crores. This is a small cap company, guys. So this is one of the risk factor you should consider while you're considering my most chip in your investment. Now, guys, here I have listed all 5 companies what I've discussed here. I have just summarized their financial performance, their valuation multiples, their historical valuation multiples, and their share performance also. So, if you look at the CG Power's performance, in terms of financial performance, their revenue has grown by 35%, what we have already discussed. Their EBITDA have grown by 52% on year-on-year basis. It is because of expansion in the EBITDA margins. You can see, guys, margins have expanded every year, just like fall in last year. Otherwise, the margins are increasing every year. Historically, this stock was trading at 75 times of P. It's a median P at which the stock used to trade in the past. But as the current P is 117 times, which is very expensive compared to the median history. Maybe it is because of this semiconductor, expansion plan. If I talk about the latest share price performance of the company over the last, not 1 year, it's year to date, means starting from 1st of January 25 till date, which is September 25. The stock has increased by just 1%. So it has not performed. It is almost at the same level, right? The next company is Keynes Semiconductor. Revenue growth is again very impressive, 60%. EBITDA growth is 77%, very impressive. Current P multiple is 149, again very expensive compared to the industry median P of this company, 120, which was also very expensive. Because this company used to trade at a very high P multiple in the past also, but current P is even higher than that. And if I look at the share price performance over the last year to date, it's negative 7%. So there is some correction in the stock price of this company over the last 8-9 months. The next company is Dixon Technology, you guys. 57% revenue growth, very impressive. CAGR of EBITDA is also almost same. It means the EBITDA margins are almost same. You can see 4% EBITDA margin every year. So growth in EBITDA is same as revenue growth. P multiple is same, 127. Historically, also this company used to trade at 127, and currently also it is trading at 127. And share price change is also same. There is no change in the share price, 0.1%, right? So there is not much performance of this from this company as far as share price performance is concerned. As far as valuation is concerned, they are almost same. Bharat Electronics, CAGR is 14%, decent revenue growth from the mature companies, near to mature companies in its space. EBITDA is 21%. It is growing higher than the revenue growth because of expansion in the EBITDA margin, which was 23%, and now it is 29%, guys. Historical P was 28 times of earnings, and current P is 50 times. There is expansion in the P, so it is trading at a higher valuation compared to the past. I can say expensive in terms of past, median P ratio. And this stock has given 27% return since start of the year, 1st Jan 25 to September 25, a positive return of 27% in such a tough market, right? So impressive return in terms of stock price. Most chip technologies, guys, again, growth is 45%. CAGR is 123%. CAGR has grown much faster than, growth of revenue. The reason being, you can see the EBITDA margin 2%, and now it is close to 9%, right? So it has almost become 4 times. Current P is 125 times. Historical median P is 184. There is a slight decline in the P multiple, but year-to-date performance of this company has been 34%. So guys, this is what summary of financials and the valuation of all five companies listed in the semiconductor space. Okay, next is challenges and the risk. What are the risk and challenges for this industry, right? We have talked about all good thing about this industry, growth prospects and all, but what are the challenges? So let's talk about challenges. There's the industry challenges are high capital requirements for fabrication facilities. So as we discussed, if you want to establish foundries, you need huge capital, right? Second, talent shortage in specialized manufacturing roles. So if you talk about foundries and manufacturing process, yes, it's pretty precise process, right? A technical process and complex process also. And there is a talent shortage because we might not have enough in-house talent, to get work into these foundries. Third challenge is dependence on the global suppliers for advanced process technologies because we need technologies from the international partners. We need processes from the international partners. So we have complete dependency on the global partners, whether they will provide us the support or not. And guys, competition from the established manufacturing hubs like Taiwan. So we are competing with countries like Taiwan who are already established, who have already established player in this segment. So we have to compete with those companies in this segment. Though India has an advantage in terms of cost competency, so there India can compete with these players, but otherwise they have to face tough competition here. Now, guys, at a strategic consideration level, technology transfer challenges from the global leaders. Guys, we need a technology transfer from the global leaders, and it can be a big challenge for the Indian companies. Second is geopolitical factors like, currently India, US tariff thing. Globally, there is instability, right, in the geopolitical relationship. So this can also impact the supply chain, right? Environmental impact of semiconductor manufacturing. Yes, there is emission and there is a concern about pollution when you will establish countries in this segment, right? So these are the concerns, guys, at the industry level. Now, if I summarize the India's future growth prospect and 2030 mission and vision, I say, in about this industry. So in 2025, currently we are at 45 to $50 billion, and we are the net importer in this industry, right? By 2027, we are scaling of domestic production, reduced import dependency, and expanding OSAT capabilities. This is our immediate target in next 2 years. And by 2030, guys, we are planning to expand this market to increase our market share to $100 billion, free significant global supply chain contribution, and 5 lakh semiconductor professionals. So this is what, guys, our long-term plan about this industry as far as India is concerned, guys. Guys, the key opportunities include export arbitrage. Yes, it is there because we can be a cost competitive in this industry. Defense and automotive electronic localization and PLI incentives. Guys, because we are focusing more on localization of automobile manufacturing and electronic defense equipment manufacturing, so this will increase in-house demand, domestic demand for semiconductor, and this is good thing for semiconductor industry. So guys, overall, India aim to build a full stack ecosystem across the semiconductor value chain by 2030 with a market share of almost 10% globally. So guys, this is what complete analysis about this industry, semiconductor industry, what we foresee in the next 5 years in India. So you can use this analysis and you can add on in this analysis and you can decide whether this is a good sector for investment from the long-term perspective or not. So again, guys, disclaimer is I'm not recommending you to invest in any of these stocks what I've covered. You have to do your own analysis, take your own informed decision based on this. It is just for the education purpose. It will help you to understanding this industry well and all the companies which are operating into this industry. Thank you very much.